International Economist Vicky Price shared her thoughts on what's affecting global growth prospects the most.
Well, the main one the OECD is talking about is trade barriers, which, of course, if you look back at their earlier forecasts, they didn't expect them to be anything like as high as they're likely to stay at. So that has been a major sort of pull, if you like, in terms of slowing down the rate of growth that they expect for this year. Now, of course, the question is how long they last. They've also pulled down a little bit the growth for next year for the OECD countries, and they have downgraded quite significantly the US, but also other countries too. So, but it's not the only one. I mean, yes, of course, there are all sorts of indirect issues, such as, business confidence has fallen and consumer confidence as well because of those tariffs. But what it also means is that because inflation is likely to be slightly higher than would otherwise have been the case, particularly for those countries imposing tariffs or even any counter tariffs that there may be, they think that interest rates are going to stay higher, which means that conditions on the financial side will also be tighter, both for households and businesses. So all that is bringing the forecast down from where it would have been otherwise.
It's interesting you talk about inflation because the Eurozone has just come out with their figures and they are actually now below their target. So is that going to be good news for consumers?
Well, you're absolutely right that this is a factor we need to be looking at because the trade theory will tell you, and if one can use sort of a bit of economics here, that the countries that are imposing tariffs are the ones with higher inflation outlook. Those that do not, but are suffering from the tariff increases in terms of their exports, are going to have lower growth and therefore lower inflation. And I think that's what we're seeing right now. So it's not going to be uniform what's going to happen on the inflation front, but certainly countries that may be affected by high tariffs are already seeing some reduction in demand, and also commodity prices are coming down, such as oil prices, for example. So what it has meant really for Europe is that it has really not been growing very fast at all. It's not at all surprising because confidence is quite low, that inflation is also, in fact, declining. And it is below target. And we're going to have a meeting of the European Central Bank this week on Thursday. And they're likely to cut rates even further. So they already are well below where the UK is and where the US is, and they're likely to be cut even further by possibly a quarter of a point on June the 6th.
We've just seen in those previous reports two different US predictions, 1.6 versus 1.2 growth rate. Realistically, how much can we actually rely on these figures in an uncertain world of such rapid change?
With difficulty, really, because anything could happen. So, for example, if there is an agreement now, or at least some of the tariff increases which President Trump wants to impose do not happen because of legal issues, courts ruling that he can't impose them, then what we might see is lower inflation, possibly lower interest rates, and possibly, therefore, faster growth in the US economy. So right now there is such big uncertainty, and this is really what the OECD has been talking about, that making any predictions is difficult. But they also say that if tariffs are lower than they're anticipating, then there will be faster growth. So we look at the two predictions and think of what this might mean in terms of the underlying assumptions, that the assumptions have to be based very much on tariffs.